Welcome to the Atomic Real Estate Show, Philadelphia's #1 real estate podcast and a Direct Subs production. Real estate investing is not rocket science, and on our show, we'll delve into best practices with a focus on the small things that add up over time. Please enjoy the authentic, informative, and actionable show with our host, Paul Jagielski.
Thank you for joining us today on the Atomic Real Estate Show. I am Paul Jagielski, and I will be your host. I'm sitting here today with our guest, Bob Saritsoglou. I said that completely wrong, didn't I?
No, you got it.
Oh, sweet. Bob is the master of mortgages. From first-time home buyers to investors, he is someone you will want to talk to when it comes to your finances and buying a home. Bob, your knowledge is so vast that I know I'm not going to be able to get to everything today, so we're going to keep it to a few topics that we can really get some information out of you. I do want to thank you for joining me on the Atomic Real Estate Show. If you could, please tell us a little bit about yourself.
Paul, thank you. My pleasure. I've been in mortgage banking now for, I think March will be 20 years exactly.
Damn.
Yeah, so time flies when you're having fun and helping people. I've worked for subprime banks that just specialized in refinance transactions. I worked for a big bank, which did both refinance, prime buyers, and purchase loans, and then a couple of non-banks. And I've landed with Movement Mortgage, which I absolutely love. It's a great company, and I think I'll be here for hopefully for the rest of my career.
Hey, I see a couple babies behind you. That's your little family back there?
Yeah. I have two kids. I have a 23-year-old son and a 7-year-old daughter. So as you can tell, I like the pain.
Dude, that is a gap beyond belief. I don't know how you get through your day.
Well, the 23-year-old's easy. They just don't want to be bothered. You know what I mean? So all the focus is on the princess now.
Yeah, all right. As long as the 23-year-old gets that, we're good on that. Now, I want to know a little bit more about your overall general business. What kind of people do you service on a regular basis?
Well, so as far as people, I mean, that's a tough one. It's very diverse, right? So, and I'll start with a quick little story. So, growing up, I grew up, parents were immigrants, lost our father really young. So my mom kind of had to do a lot, and I felt like that put me in a different kind of a role as like a young boy, where you want to help out your mom, you want to kind of be that dad or father. And so I saw her struggling with making ends meet, working a lot of hours, and then kind of being ignored when she had to go to a bank because she had broken English or didn't speak the language. So I didn't really know it back then, Paul, but I think it actually did really kind of put the fire under me, where it gave me this extra passion. So to answer the question, fast forward to today, and I think I really do kind of go out of my way sometimes to help the client out who may not speak perfect English. Yeah. And a lot of times they're neglected by sometimes on purpose, but sometimes just because people aren't really sure how to help every type of person. And I think that is what makes me unique. I know a lot of colleagues who just rather take the easy route, and there's nothing wrong with that. But I get a lot of pleasure and satisfaction in helping everyone, but especially people that I feel like they're going to be neglected or maybe ignored by your average mortgage banker. And so I've kind of made a career on that. And I think that it helps me grow my business, because they've become probably some of the best referral clients because usually it's a small community, and that small community, whether it's Greek, Italian, or maybe they're from East Africa, or they're from Russia or China or India, they're usually going to have a small knit community that they immigrated to and say, hey, I know who you should call. Like when you're ready to buy a house, call this guy, Bob. He gets it. You know what I mean? He's not going to ignore us. He's going to be patient. And I think there's a lot of cultural issues that a lot of real estate people, loan officers don't relate or can't relate with. And that's usually the reason why they shy away. It's not because you don't want to help someone. Like a lot of us have that in us. We are born to help people. If you don't want to help someone, you probably should find a different business. So that's worked out for me, man. Pretty good.
No, dude, I will say I love your why. I mean, we've worked together now a handful of times, both personally and with real estate, me putting over our clients over to you. Dude, I can't say one time I've ever heard anything negative about you. Everybody says you go above and beyond. You know your stuff inside and out. And just as a testament of an agent myself, that is always a pleasure to be able to know you got to call this guy because I know he will take care of you personally.
I appreciate that, man. I appreciate that. Yeah, and that's part of what, like, you know, people say, do you love what you do? And it sounds cheesy and corny, but I truly do. I couldn't.
Oh, it comes out.
Yeah, I couldn't imagine doing anything else. Especially since it's, you know, this is a very rewarding business. If you do it right, you can make a great living and you're helping people. You know, so
I hate the word guru, but I really don't have a better word to describe you and what you can do with people's finances. It's pretty exhilarating when I can tell a client to call you and we had a plan in action, and then they're like, well, I talked to Bob, and if we do X, Y, and Z, we can actually stretch it this way. And I'm like, all right, let's do it.
Yeah.
Where, you know, normally if it's a different mortgage broker on my end out of it, I didn't recommend them. They got somebody and they're just like, yeah, tell me the number. Yep, that's what it is. And the conversation's pretty much done. Where, again, I know you're going to go dive into their finances and you're going to find out the best situation for them, especially if they can actually bring you a house that they know they want specifically. So that's awesome, man. I got a couple questions here for you that I would like for you to drill down. Really, seller concessions and how to get a temporary buy down is something that's hitting the market right now heavily, with mortgage rates kind of fluctuating, prices fluctuating. So explain to me how that helps a buyer.
So I'll explain how it helps, but I'll also take a minute to kind of rewind. This was, I feel as though in 2022, at the end of 2022, and now this month in the new year, it's become a really hot topic. And to a lot of people, it almost seems like it's brand new. It isn't really a new thing. Temporary buy downs have been around, but they become irrelevant when rates are low, right? Yeah. Because you're not going to pay to get an even lower rate because it'll cost you even more. The bank knows that. The investor knows that. So the price is set accordingly, according to supply and demand of the money. Okay. Traditionally, or I would say historically, this was a niche program or a niche add-on to a program that home builders used. And so like about 2010, 2011, I focused on builders a lot, and they had to drive traffic to their community. And one way to do that is stick a sign in your model home that has an interest rate that's 2 or 3% lower than the market, and people will come. Right. And so that's kind of where that came from, which, by the way, any real estate agent could do the same thing with their sign on a property. Right. So, but that's kind of where it originated, you know, it was home builders. And I think the reason why, Paul, it's not cheap. So the way that like a buy down works is, let's say today's mortgage rate is 6.75.
Okay.
And I speak to the buyer, or you have a listing, because it works a lot on listings as well. You're not moving a listing. You're having, you're not just getting quality offers. One way to entice a home buyer, incentivize them, is to offer a concession. You could drop the price, right? So let's say you have a house listed at 580K, and you have a conversation with the seller, and the conclusion is we got to knock off 20K.
Okay.
So you knock off 20K, it's 560. You probably will get more traffic than you had previously, but the real value, in my opinion, is offering a buy down with up to $20,000 in that budget, because that's really going to move the needle for the buyer's monthly payment. Dropping at 20K, if I'm financing 95% of that house, only 5% of my own money, that's not a lot of, that's $2,000, right? That's nothing.
Yeah.
right? Plus the closing costs. So it's not really doing a lot for the buyer. Yes, the payment's a little cheaper when you knock off 20K, but it's marginal. It isn't much, right? It's not going to get us to
20, $30 maybe.
Yeah, to knock down your door and say, hey, we need to see this listing. But if you all of a sudden say, hey, we're offering up to $20,000 incentive on a 3-1 buy down, 3-2-1 buy down, and the 3-2-1 means in the first year, your interest rate is going to be 3% lower than the starting rate. So if the starting rate is 6.75, I'm going to start with a 3.75, which equals a lower monthly payment, and we're talking significantly lower.
Yeah, you almost cut my payment in half.
So yeah, I'll give you an example. I think I had one. It was a $620,000 house, and they put down a small down payment, 5%. We did a 2-1 buy down. I'm sorry, this was a high 500s. It was like 560, 570. We did a 2-1 buy down. Their payment went down in the first year $700.
Oh my goodness.
A month, right? So is that for everyone? Probably not, because some buyers are irresponsible, right? Some people are irresponsible. They're not disciplined enough to say, I got to make sure I have the payment, the note payment, the original payment in my budget. And by the way, you won't be approved for the loan unless you can afford to repay 6.75. So we make sure we're not qualifying you on 3.75. That wouldn't make sense, right? So you have to be qualified for it. But the second year, it goes up another 1%. So it goes to 4.75, which means your payment's still way lower.
Yeah.
You're below right. 5.75 year 3. And then after that last year, you end up with the rate that you would have started with at 6.75. Now, here's why I actually love this product. I love it. Honestly, I only love it if the buyer isn't paying for it with their own money.
Oh, so you're asking the seller to pay for it?
Yeah, that's why it's a concession from the seller.
Right? So the seller still gets their price.
Seller's still going to get their price, yeah. But they're making a concession, Paul.
Correct.
So I have a house for 580, and I sat down with you and said, look, we're not getting any showings, we're not getting quality offers. Let's knock off 20K. You might say, you know what, before we even do that, let's leave the price where it's at. We'll offer a $20,000 seller's assist up to 20K. We'll have them call Bob, right? Yep. And I'll do the math and make sure they qualify for it. And then we're going to use the concession. It may not be 20K.
Absolutely. But you're advertising it.
We might use $13,000 and the seller keeps the other $7,000. So they're using 13K and the buyer is going to be super happy. They're getting a payment way below market. And by the way, this is what I was getting. This is why I love it. That money is actually put into an escrow account by the lender. So we take that money when it's time to make your payment. We take it out of an escrow account. We apply it towards your payment, and you pay the lower amount, the difference. So what happens now when I call you up and say, Paul, it's September 10th, 2023. You've been in this house now for 9 months. We have the buy down, but mortgage rates are 5%. I think it makes sense. You might want to look at locking in right now on a refinance. I know we still have a couple more years of lower rates, but you do have this opportunity. We can take the money that's still sitting there that's going to be used to pay the next 2 years, and we can apply that towards the refinance and reduce your balance. So you don't lose the money. That's super important, because if I did a permanent buy down, which is when you just buy points on a loan, that money is gone. If I were to refinance, there is no escrow account with your buy down. It's completely gone. So, for those reasons, I think it's a great idea. Whether you're a seller who wants more traffic in your property and you want to sell your property, you're not getting the traffic, or you're a home buyer who maybe has a unique situation and it would just make sense for you. I'll give you the example. That same buyer who did a 2-1 buy down. It cost $12,000. I think the loan amount was about $550.
Okay.
We had 2 buyers, husband and wife. The wife had a baby. She's still in FMLA. she'll be back to work in about a year. So for the first year, we have one income, really. It makes a lot of sense for this family. And to your point, I had a phone call consultation, and I peeled the onion, discovered, oh, she's not working. She's got a great job with a great salary, but we're not going to see that for at least another 9 months to 10 months. Well, guess what happened, Paul? In this case, she decided, I'm probably going to stay home with the baby a little longer and go back to work later because we're not going to sweat the payment right now.
Oh, dude, that's awesome.
Yeah, they have double income. They can easily handle it. And it just worked out great for the buyer. So,
dude, that's phenomenal. That goes right back to your whys, for the client, figuring it out, understanding the whole market, and then just bringing it all together. Dude, that's awesome.
Yeah, it worked out great. I don't know if it'll always work out that way, but look, if the seller's paying, it's a win-win on both sides, right? Because the seller was going to reduce the price anyway.
Correct.
If you're a buyer, yeah, even if you have two incomes, who wouldn't want a lower payment up until it's time to refinance, because that's inevitable. That's going to happen, right?
Dude, if I can throw that $700 a month into the stock market every month and then get a little compound interest off of that for the 1-2 years that it's buying down, hey, I just made some money rather than losing it. It's a win for the buyer. It's a win for the seller. Both agents are happy about it because the deal's going to get done. The price didn't have to be reduced out of it. Man, that is awesome. I like that one a lot.
It's a really cool feature on our product. So we offer 3-2-1 buy down. We offer them on conventional loans and government loans as well.
Dang. So your shirt says call Bob to.
What can you see it? Call Bob to get a home.com.
I love it. That's awesome, dude. I got to get one of those shirts.
I'll get you one. Yep.
So I'm a first-time home buyer. I don't even know where to start. What do I do? So the agent, Paul, just told me I ain't going to show you houses until you get a pre-approval from a mortgage lender. He gave me these 3 people, and I got to call somebody. What's that conversation like for you?
So usually when someone mentions that they're a first-time home buyer, even before I ask, I usually feel like that means one of two things, or maybe both. It usually means I'm not really sure what to do or what to expect. Or it means, hey, Bob, you got any money that we can use for free? Because we need some help with the down payment.
Yep.
And in today's market, it makes a lot of sense, right? Home prices are they're high, right? They're high, but they're not inflated like a lot of people think, because they are what we're willing to pay for them, right?
Yep.
And home prices are going to continue to go up, in my opinion. But usually it means I need some help with my down payment. What do you have? And right away, I'll go into finding out, based on their demographics, income, assets, credit profile. I'll offer them usually one of 2 grants. If it's in the city of Philadelphia, there's a nice grant that the city has for first-time home buyers, but it's very restrictive, and it's only for the city of Philadelphia, obviously. And then there's a PHFA, which is Pennsylvania Housing Finance Agency. They have some great programs, and just recently, I don't remember exactly when, but I would say late summer of 22, they really enhanced their first-time homebuyer products, which allow grants. And so I've kind of run with that. I didn't do a lot of grant business before, but the income limits are really high now, Paul. $180,000 per year. So if you make more than $180K per year with PHFA grant, household income, so that's you and your spouse. I'm sorry, that's actually per bar. That's borrower income. So if your spouse works, the program that I'm really excited about is the KFIT program with KFlex. These are 2 acronyms that PHFA uses, but they allow up to 180K, and I don't remember the exact number off the top of my head. I think it's 484K, so 484,000 maximum purchase price. That's a pretty healthy budget for most first-time home buyers. And what does that give you? That gives you 5% of the sales price in the form of a grant that you can use, Paul, for both down payment and or closing costs.
Dang.
Yeah, so I've used it. I mean, just recently we did one in Doylestown, $470,000 house, qualified for a 5% grant. The buyer, she's a first-time buyer, so we did 3% down, conventional loan. I used the other 2% to pay for the closing costs, and then she came up, I think, total out of pocket $4,400, and that's a $470,000 house.
Oh my gosh, 1% down.
Yeah, it's crazy. All right.
Oh my gosh.
And the rule is you just need $1,000 of your own money with that program.
Yeah.
So which means like if we would have got a seller's assist for $3,500, she would have just paid $1,000 out of pocket to buy a house for $470K.
Oh my gosh. Now,
pretty amazing.
When you're talking these grants, is that work me as the buyer has to do, or is that something that you as the mortgage?
So great question. If it's the PHFA, I let them know. Don't worry, my team and I will take care of the whole thing. If it's the city grant, they actually, and we'll help them with this. They have to go to a nonprofit agency that the city has designated, do some first-time home buyer workshops, which are really beneficial because you get educated on the process as well. And then they get a certificate. That certificate is a requirement before you make an offer. You cannot make an offer and have an executed contract prior to the certificate. So that's
very important.
And that's just for the city of Philadelphia grant.
Yeah, they're always tough.
Yeah, they're tough. I mean, they're a little tougher, but you can use this PHFA grant. So the 5% grant that I love, you can use that in Philly as well.
Oh, no way.
You don't have to just settle for the Philadelphia grant, which is $10K. You can get up to 5% of the sales price, and my team and I will take care of helping you qualify for that.
And I mean, 5% of the sales price, you're going to get $10K easily out of it.
Oh, yeah. Because, I mean, if the average home price is $300,000, $400,000, you're looking at $20K. And if you're a first-time home buyer, you need to be for the program. Usually, we're going to do a conventional loan with 3% down or an FHA with 3.5% down. And we may need a little help from the seller for a seller's assist if the buyer doesn't have the complete amount of funds. But in this market today, we're finding that that's not as difficult as it was 9 months ago to get a concession from a seller because we have there's a little less buyers out there.
So can I use that program? I'm Paul. I'm 20 years old. I want to buy my first house. Everybody keeps telling me don't buy a house, buy a duplex, buy a triplex, live in it for a couple years, fix it up, and then wash and repeat. Can I use that program for something like that too?
Yeah, because all you're asking is, can I buy a duplex or a triplex? And FHA allows you to buy a multifamily property up to 4 units, and the minimum down payment is still 3.5%.
Dang. So this is a broad first-time home buyers. This isn't just, hey, I'm a married couple and I want to go buy my house. This is, you have not bought a house. You can use it up to a fourplex in a first-time home buyer.
Yeah. And the first-time home buyer qualification is, have you owned a property in the last 3 years?
Nuh-uh.
Yeah. Oh, yeah.
Wow.
That's really the first-time home buyer question.
Dang.
It isn't like, oh, yeah, I bought a property in 1993. I sold it 10 years ago. Well, if you haven't owned any property in the last 3 years, you are now a first-time home buyer for purposes of most of our agencies, Fannie Mae, Freddie Mac, and HUD.
No way. That's awesome. But back to what I got to bring to you as a first-time overall general home buyer. So you're going to tell me different programs. If it's in Philly, I got to do a little bit of legwork. What else do you need from me to be able to start the process and understand? I mean, I don't even know how much buying power I have. Can I buy a $1 million house tomorrow?
I hope so. Well, I mean, typically what happens is, like, I work with realtors who, we have, just like you and I, we have a relationship. So a lot of times I'll work with that realtor and they'll determine like how they like to refer clients to me, whether it's a phone call, email, or text. And then from there, I just kind of say, let me take it from here, Paul.
Yes,
we'll get back to you when we're ready. And when we're ready, it means I've already qualified them. Awesome. I put them through the underwriting process up front. We pre-approve them. And the way I do that is I have a quick phone call, let them know I'm not some online lender or some robot. You know, I'm local. I live here. I'm a father. I'm a husband. I live in the community, and I can help. Right. So at that point, I'll get an email if I don't have one. Send them a link. Have them fill out a digital pre-approval, and then set up a buyer consultation call within 24 hours of them completing it. And then usually we're coming back to you with an email that says, "Congratulations, you've been pre-approved." And I'll make a mock closing cost estimate.
Yes, you do.
So that way they're not just pre-approved, because that you could get that online in 2 seconds, right?
Thank you.
We want to make sure that they understand what it's going to take, whether they use a grant or not, because there's a downside to the grant. It's not all.
Everything has its catches.
Yeah, the downside is typically, to me, the downside is you pay a slightly higher interest rate. If you're going to take money from the state of Pennsylvania or the Commonwealth of Pennsylvania, they want something in return. And to me, it's a tax. It's a higher interest rate for the risk that they're taking, right? But they want to promote home ownership, so you're not paying like 20%. You know, it's pretty reasonable. So that's the downside. The other downside is if you sell or move in the first 10 years, whether it's the Philly grant or PHFA, they want part of their money paid back.
Ooh.
Yeah, so keep that in mind. That's why I don't think a grant's for everyone.
Right.
Even if you qualify for it, we want to, during my buyer's consultation, we're gonna kind of hash that out and find out, is the juice worth the squeeze? It may not be, right? Yeah. If it's not, you know, then hopefully they have another, or not even hopefully, we'll find another way. Whether it's to get their savings and maybe wait a little longer, or get a gift from family member. Wow. But I have them go through that process, bring them back to you with the approval, with the estimate, so they know their monthly payment, projected monthly payment, and projected cash needed to buy.
Okay.
And I'll lump in the grant if they're eligible for the grant, so that way they can see, wow, $2,200 and I'm buying a house. Cool.
Now, all that little work that you just did that hurt my credit score since you're pulling all my finances?
Well, I won't say it hurts your credit score. Can it lower your score? It probably can. If you get an inquiry on your credit report, and we do hard inquiries, some lenders will do soft. I won't do them. It's a waste of my time, your time, and the buyer's time. So we do a hard inquiry check. What I tell people is, this is a fact, if you have a mortgage inquiry, even if you have multiple mortgage inquiries, as long as they're within a 45-day window, they count as one credit inquiry. 45-day window. I don't mean if you walk into like the Gap and get a Gap credit card. I'm only talking about mortgage.
Yeah, okay.
Right. And honestly, a lot of times, you know, a lot of people are going to shop ahead of time. They kind of look online, or if you get a referral from a realtor, I'm sure they look me up. And if you do it right, they may call one or two other people and find out that rates are pretty close from one lender to the next. I think it comes down to the service that you get and the trust level. If you don't trust, the realtor or the lender, you're probably going to continue to look for someone that you trust.
I'm glad you said that, because a lot of people don't realize that you guys are restricted on what you can really charge an overall customer, and that goes across the board. So it's not just movement; it's anybody.
Right. Exactly.
It comes down to your fees, and as you say, your service. Is the service worth the cost out of it? Because there's lenders out there that I've worked with in the past that I will tell you right now, it ain't worth the cost to work with them. I've had closings that were scheduled for 9 a.m. and this lender happened to be in Texas, and he came to the closing at 10 a.m. Because it was 9 a.m. his time, and he wasn't paying attention that we were in Pennsylvania. Wow. And we were ahead of him. So and he was an expensive lender. You know, he was not cheap by any means. That service part, and that's why we wanted you on so bad, Bob, is because that service part is so key. And when it comes to lending and it comes to my clients, I want to make sure that they're getting the best, because the people I refer to is a direct reflection on myself. You know, you read the fine print of that 10 years. What if another lender didn't? I referred them to that lender, and in 5 years, they call me up and say, hey, we want to sell. All of a sudden, they're stuck in a sticky situation. And they're like, you know what, Paul? You put us here. You're fired. We're going with somebody else who can get us out of it.
Right, right.
All because my lender, the guy I recommended, didn't do the full job. So to me, your service is phenomenal. I'm glad you brought that part up, because it's really what does separate lenders is their service and their commitment to the client.
Yeah, I second that, and I think it's really for everything, right? Whether I hire a real estate agent, whether I go to a restaurant, whether I go buy a TV, whatever you're in the market for as a consumer, really what we're saying is we want the best service.
Yep.
We all know price matters, and a lot of times price is competitive, right? We live in a very competitive environment, and price is competitive, so we have pretty sharp pricing, but not everyone has the same service levels, and we want to do it right. We want people to refer all their friends and family because we kick ass in service.
Yes, sir. But I'm glad you brought up price too, because that kind of leads me right into my next one. Where do you think the market's going with these house prices and these mortgage rates? Because everybody's all over the board, depending upon if you're an optimist or a pessimist.
No. And look, so I don't have a crystal ball. Paul doesn't have a crystal ball. But if I am a betting man sometimes, so if I had to bet, home prices, in my opinion, are not dropping. They're not going to fall. And the reason I say that is we have, and these are like rough numbers, but we have 350 million people in this country. They're not all qualified to buy a home. They're not all adults. But even if we just said there's 75 million qualified people who are adults who could buy a house, we on any given day, we only have 750,000 active listings. That does not count homes that I put a deposit down to buy to build a house. It counts active listings. So 750,000. So what I'm getting at, Paul, is we have a huge inventory issue.
Yeah.
We've had one for a while, and it really came to fruition during COVID when everyone said, "Oh, get me out of this place that I'm at. I need to be in a better spot. I might be stuck in my house, and I want to have comfortable living in my house and work from my house." And so I think that really exaggerated our inventory issue. And so that's not going to just change overnight. Even if rates went to double digits, we still have a huge inventory issue.
Oh, absolutely. Yep.
Right? And so what I think and what I'm saying is home prices will continue to appreciate. They're probably not going to appreciate like they have in the last 2 years. That was a global pandemic, and it was reflected in the run to housing. So those
free money had to go somewhere, right?
Yeah, and there's a lot of free money out there on the street. There was a lot of people who were a little reckless too with their money, and that's kind of come to a halt, right? And so
thankfully it wasn't the banks being reckless this time, though.
I don't know. I don't think it was the banks being reckless. The banks weren't giving out the money. The government was.
Yeah, exactly. That's why everybody who asked me, "Oh, it's going to pop again." Dude, the 08 was the banks being reckless. These were buyers being reckless. Completely
right. And so with that being said, I think home prices will continue to appreciate at a much smaller level.
Yep.
Right.
Almost back to normal.
Probably single digits. But if you get 2 to 8 to 9 to 10% return, that's great. Right. You're happy. Right. And so to the second part of that, I think mortgage rates they're going to come down, and they're going to come down pretty soon. If I had a bet, it's going to be this summer. My bet would be this summer. I think it's going to be pretty quickly. A lot of the numbers that you read or hear about in the media, they're chosen specifically for whatever narrative the media or the news or whoever you're getting this information from, whatever narrative that they're pushing, so you can make numbers look almost any way.
Any way you want.
Any way you want. But the fact is, the government took a long time to recognize that we had high inflation. They called it transitory. They were about 1 year late on that. And when they finally reacted, I think it was maybe March or April of 2022, and they started increasing rates, what they did was slowly stop people from borrowing, right? Want to put a halt to all the money exchanging, and it's working, right? So it's worked, and it's slowed down our business significantly. Refinances are almost completely gone and have been for the last 7 or 8 months. But that's done its job, I think, already. And I can already see, I'm seeing glimmers of hope. I see buyers finally recognizing that you don't have to believe everything you read in the media. They should talk to a lender or talk to someone who does this for a living and kind of follows the markets. I don't know the number, Paul, but if I had to bet, I would say the mortgage rates this summer are going to hit 5%.
Wow.
Yeah, 5% interest rate. We're going to be booming again.
Wow.
Buyers will be out there. So my message to anyone who's on the fence, I would get out there now, get with your realtor, get a pre-approval, and maybe try and buy a house before the summer, because you're going to have way more people competing with you this summer than you will right now, up until probably, the May or June, when a lot of people will list their houses to get into the school district before the school starts.
Yep, and that's the key part. I just had a client come up to me and ask me if they should sell in the early spring market or later. And I said the same thing. I actually almost the exact same thing you said. I was like, later. Let the beginning kind of work itself out and let everybody start shuffling, and then you're going to start seeing some changes happening. Because I agree with you. I believe.
Like, Paul, what I'm saying is, I would buy. I wouldn't wait. Is what I'm saying. I would buy.
No. From a buyer, yeah. As a buyer, I'd go right now.
Yeah. As a buyer, yep, exactly.
As a seller, they have a beautiful house that is perfect in a neighborhood for schools. So that's why I said, you wait, push that a little bit longer, and wait till you get some desperate families trying to get into school districts, and you'll get a better price.
Got it. That makes sense.
But yeah, I agree, dude. I don't see these prices crashing. I don't see mortgage rates skyrocketing through the roof. I see getting just leveling off, coming back to pretty much normal out of it, what we've been seeing, and still a seller's market, which is, it's a long time, but hey,
this week I've locked two loans below 6%. We're already getting there. Yeah, we're already getting there. 5.75, 5.875. Yeah, on any given day it might fluctuate and go to 6, 6 1/8, 6 1/4. But we've made a significant difference in our peak rate, which I think made it to 7 1/4 back in either September or October, and that's why I believe that we're going to continue to go down to close to 5%.
Is that where investment rates are right now? Around 7?
No, investment rates are high. They're always higher
than
an occupied property by the owner, because of the risk involved with non-occupancy and non-owner occupied. But rental property rates are in the 7s still.
Yeah.
The low 7s, sometimes mid 7s. But the one thing I have noticed, which is it's been this way since June or July, is you can't really. It's very hard to finance a rental property without paying points, discount points. Yep. So. Yeah, and when rates were low, that wasn't really a big issue. And look, this tells me something. It tells me if I'm an investor on Wall Street, and that's who dictates these mortgage rates, it's not really the Fed. The Fed's lowering rates for consumer borrowing on home equity loans, credit cards, which is a big one. Credit card rates are up. And if you have any kind of variable rate student loan will be impacted by the rate. But investors on Wall Street who are buying these bonds and packaging and selling them to Fannie Mae and Freddie Mac, they're the ones who are going to determine when they want to be in or out. And right now, by having points, discount points is almost a requirement on a rental property, it tells me they also know that rates are going to go down sooner rather than later. So they want to collect their money at closing. Right? Yep. So if I take the risk and put up the money, and I know rates are going to go down, Bob's going to call Paul to refinance. I got to get my money up front on the discount points, because I'm not going to make any money on the back end. It's going to be gone, right? Yep. And you can throw in prepayment penalties if you want. We don't have any prepayment penalties on our in-house products. If you have to broker out to like other banks that we work with, they're going to charge a prepayment penalty because they got to stay in business. But if you bought a rental property and financed it with me, there is no prepayment penalty.
That's awesome. You guys also keep all your loans, right? You don't sell them out to Fannie Mae.
No. Well, we service them, but yeah, they are sold to Fannie and Freddie.
Oh, so you do still service them all, though?
Oh yeah, we service them. We don't service jumbo loans.
Okay.
And we don't service the loans that I just talked about that were brokered out to these other smaller banks.
Yeah.
But the majority of our business, probably for me, 98% of my business, we're going to service those loans, which I know you love. I love too.
Yes, I do.
You call me and call my team if you have an issue after closing, instead of sitting on hold on an 800 number listening to their music.
Yeah. Well, and real quick about your team, because your team is awesome. Your team is probably the most responsive, happy team I've ever dealt with. Even on my mistakes that I've made in the past, they apologize to me and they find an answer for me. So thanks to your team. I appreciate them wholeheartedly, especially Miss Michelle.
Yeah, Michelle's great. She's so she has like a hybrid position now, which it's a good thing. So she was my assistant, but what we did is we upskilled her, got her a license, and she's now a mortgage processor and assistant for me. So I like that, Paul, because when the loan goes into underwriting, Michelle's already involved, right? Yep. When it comes out, that's usually when a loan processor is involved, and you'll see a different name. And we work along with that processor to get any other outstanding paperwork to close. But Michelle's that one person now, so it's like a one-stop shop, and it's really helped the business out. Our turn times are phenomenal. We're getting our average approval and commitment letter is 8 hours from when we submit it, so it's really fast. And actually, we could be faster than that.
Oh my goodness.
But right around that time. And you don't need typically that quick, but it's pretty cool to say that, you know?
Dude, we didn't even get into all the different types of financing, HELOCs, renovation loans, buying. We got into some buying points. We didn't get too much into it. Rate locking, we touched slightly. I mean, there's so much more stuff that we could get into. So we're definitely going to have to continue this conversation on more episodes.
Okay. Yeah, that makes sense. I know you and I could talk forever, right?
I don't know if I should really put this out there, but like I call you randomly just to pick your brain about money markets because I know you've done your research onto it. And every single time, it doesn't matter if it's morning, evening, or if you're at a wedding on a weekend, you have answered your phone for me.
Weddings are usually boring anyway.
yeah. I mean, and you give me the answers. So I appreciate all of that. And I really do appreciate your time with us and taking all this out of your day and all your insight into the mortgage world. This really, truly has been my pleasure picking your brain today. And I especially want to thank you for being able to break this down into free, actionable, small atom-sized pieces for our listeners. That's the biggest takeaway for us. But before we actually wrap this up, I got two little questions for you, and I need a quote from you. What do you wish you learned earlier in life, business or personal?
What do I wish I learned earlier in life, business or personal? Patience, I would say. I wish I learned patience earlier in my career because, I wasn't patient. And even today, I'm guilty of it in many different aspects, but I have found that being patient in professional setting is way more rewarding than I ever could imagine. You hear a lot, right? You're observant. It makes you a better listener, Paul. And I think it gives you time to kind of use your head and come back with the right either message or response or whatever the situation is. So patience.
I like that. What have you recently implemented into your life that you weren't doing a year ago?
So this might sound trivial, but going to closings. Prior to COVID, I was at every settlement COVID happened, no one was going to
No one.
Right. At one point, real estate agents weren't going, and we were told not to go.
Yeah.
And I feel like that I need that touch. I'm a people person, and so just by going to these settlements that I've gone to in the last 3 months, it's kind of rejuvenated me to say, like, I miss that. I kind of love that. So that's one huge change, and I'm going to continue to see that through the rest of the year.
That's awesome. Yeah, COVID changed some things, some for the better, some for the worse, but that personal touch, especially you got closings, I'll tell you, it's nice to have the mortgage person there to make sure everything is nice and smooth. You guys can answer a lot of the questions that us agents cannot.
Right. Yeah. We don't want to put the onus on the notary too, because I think that's what happens a lot of times.
Yeah, definitely during COVID it did. And I can't tell you how many deals that delayed or wrenched up one way or another that I was personally involved in. So I couldn't imagine the rest. What's your favorite quote?
Hope is not a strategy. That's my favorite quote, man. It irks me too when I'm kind of in the middle of things. I'm trying to figure out a solution to a problem, usually a mortgage problem, and whether it's an underwriter or whoever I'm dealing with, it could be a realtor. If they say, well, I hope it works out, I hope I get a bank statement by tomorrow, it's like, listen, that's not going to work. All right, I have to pick up the phone and make the call, or you have to go make a call, and we'll figure it out.
Crossing our fingers ain't going to work, huh?
No, that's just not going to work. That's not going to get us to settlement. There's going to be a lot of angry people, and you're going to tell them, well, I was hoping it would work out. It just didn't work out.
How can our listeners get a hold of you?
You can call me 610-505-1554 or go to callbobtogetahome.com.
I love it. Callbobtogetahome.com. Well, that's the end of our episode today at the Atomic Real Estate Show. There will be much more actionable advice that will be free for the taking in our next episode. So be sure to tune in next week to the Atomic Real Estate Show. Thank you again to our listeners, and especially to you, Bob, for being so generous with your time and your insight. This has been a Direct Subs production. Check them out at directsubs.com. And please remember to like, share, follow, and comment anywhere that you choose to listen.
Thanks, Paul. It was a pleasure to be on with you.
If you enjoyed our episode, please consider supporting the show by rating and reviewing the podcast. Also, check us out on Instagram at Atomic Real Estate Show to find out when new shows drop and to participate in our community Q&As. The Atomic Real Estate Show was brought to you by Direct Subs. Direct Subs is the #1 place for real estate investors to connect with local contractors for their flips, rentals, renovations, and new construction projects.